Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Waves Weekly, series I post every weekend where we cover recent news and current events that I believe will impact the markets. These episodes are meant to be more chill, so sit back, grab yourself a drink. Right now, I am drinking yerba mate, sparkling grapefruit ginger flavor. These things are fire. I hope you guys have all had a great weekend so far, and cheers to an eventful week ahead. All right, so as always, we'll go over each topic that we're going to be discussing, and then we'll dive into each one individually. First things first, you guys, of course, we have to cover this piece of news that's right in front of us. Joe Biden wins the U.S. presidency. So, as I've been saying for the past few weeks, you guys, regardless of who wins, and I'm completely indifferent. I'm happy either way personally. Regardless of who wins, as long as we have a defined winner, as long as we have some certainty in the markets, that's good news for me, okay? So we do have a winner right now. That's huge news. At the time of recording, I'm actually recording this on Saturday morning. So this news just came out, and it's a big deal, okay? So we will go over this, but more importantly, this will obviously affect the market. So here's what a Biden presidency spells for stocks, bonds, and commodities. Again, we will go over this article. I'll also give you guys some of my personal opinions about this, but it's just a nice quick article to go over with you guys, just get some extra takes, and again, I'll give you guys my thoughts around this as well. Moving on, talking good old Buffett. It's been a while. Warren Buffett's Berkshire Hathaway bought back a record $9 billion in stock in the third quarter. So this is, it's always good news, you guys. You always want to see individuals who own companies buying back shares of their own company, because that means that they're confident in their companies. And obviously, Buffett, Mount Rushmore of investing legends, Berkshire, huge funds, and I just thought this was worth talking about with you guys. It's always bullish, just for the markets overall when you see things like this going down. Boom. Next, Winklevoss Twins ride Bitcoin surge to become Bitcoin billionaires again. So this is huge, you guys. That's actually ties into the content of the week, which I will talk about later. Bitcoin billionaires by the Winklevi and the Winklevi. But this is cool, you guys. Again, this is just riding that Bitcoin wave. Bitcoin is it's a little down right now at the time of making this video, but you guys, the short term is so irrelevant to me when the fundamentals surrounding Bitcoin are so freaking strong. And it's for sure, we've confirmed this bull rally. We've confirmed this new 2020-2021 bull market. Okay, so we will go over this, and then we will finish it off with ETH 2.0. I've been talking about this for the past week. Did promise this story in the Waves Weekly, but this is huge news. Ether has performed very well over the past few days, and it's because of this. And if you guys aren't too familiar with what Ethereum is, then this will give you a little idea into what it is. But ETH 2.0 is focused primarily around staking. So pretty much if you put up X amount of Ether, you obtain X amount of interest. It's pretty much just like having your money earn interest, but your Ether earning you Ether. Okay, so huge update. Obviously, there's efficiency updates in here too, but we will get to that at the very end. Before we get into any of this, though, I will ask you guys, as always, to please give the video a like if you do go on to gain value from it. Subscribe to the channel if you're new around here, want to catch more content like this. And of course, check out my complete portfolio daily newsletter, first link in the description. If you want to know exactly how I'm going to be trading this week and rationalizing my thoughts in a newsletter that I will send you guys every trading day during market hours. Okay, so exciting week ahead. The portfolio is going to be looking crazy. I'm excited to see what comes. So check it out. Once again, first link down in the description if you were interested. If not, though, no worries at all. Let's get into this. So this was just a visual, you guys. Again, Biden at 290, Trump at 214. They say bitter contest here. That's obviously just a headline. It was pretty bitter. It's going to get pretty bitter. But who didn't expect either one of them to go down without a fight? Okay, you want that. This is a huge race. This is a huge deal. So it makes sense that there's going to be a little there's going to be a little jabs back and forth. But that's all in good competition. Hopefully it stays clean, and as long, again, the most important thing, regardless of which side you fall on, you should just be happy if you're involved in the markets for your money's sake that we have a defined winner. Certainty is good for the markets. Always remember that, guys. Okay, so let's move into this. Here's a guide to how stocks, bonds, and other assets will perform under a Biden presidency. After days on tenterhooks, what a weird choice of word. Investors now have clarity about the next occupant of the White House and will start planning for the presidency of Joe Biden. On Saturday, Biden was projected the winner by the Associated Press. The 77-year-old Democrat beat Trump in Pennsylvania and other key states, propelling him to victory over incumbent President Donald Trump. The projections for victory for the former vice president come amid the heavy toll of COVID-19 pandemic that had framed much of the race. Here's what the changing political landscape means for investors across Wall Street. Stocks. So we will just be focusing primarily on stocks here. Regardless of the victory in 2020 elections, analysts said a declared winner and thus less election uncertainty paves the way for even higher U.S. stock prices. Even with President Trump's campaign as recently as Saturday morning, stating his intent to challenge the election results in several battleground states. Also, many investors had penciled in a Biden presidency, but a Republican Senate as the most likely outcome well before the November election, and thus had plenty of time to game out the eventual implications. So pretty much what they're saying there is that a lot of this was already priced in, which it definitely was. I think the Vegas odds were so bad, and the polling statistics were this was such a close race, you guys. Although right now it's 290 to 214 really isn't close when it comes to electoral votes, but you're talking 74 million to 70 million. That's pretty close as far as the popular vote goes. So this is a known outcome. Risk assets like certainty, said Scott Gimble, portfolio manager at BMO Global Asset Management. So again, it all comes down to certainty, you guys, especially risk assets, like a lot of the stocks that we talk about here a lot on the channel. Bitcoin, cryptocurrency, literally every equity, like the tech sector can be considered a risk asset at this point in time, just because it's inflated so much. So certainty is good. Certainty is good. Again, like think back to March, the epitome of uncertain times when the world was in panic. That's what happens when you see true fear and true panic. And right now, again, a lot, like, because of all the polling and stuff, although it was incorrect, a lot of investors already had the sense of certainty as to what might happen, what the election results might be prior to this, and that was already priced into the market. And now that everything's being set in stone and kind of validating what everyone thought prior to the elections actually going down, that's just going to add another layer of certainty on top of what everyone was already kind of hunching. So to sum it all up, once again, certainty equals good for markets. A divided Congress from a policy perspective takes extremes out of either direction. The BMO money manager added, taking the more ambitious measures from Republican or Democrat policy agendas out of the equation. Did I highlight? Okay, I did a little bit more. The big story now could be how stocks with rapid earnings growth perform against shares of more economically sensitive companies. Biden may have trouble pushing for stronger regulatory and antitrust action against some of the high-flying technology companies, such as Google parent company Alphabet, which now faces antitrust lawsuits, and Facebook, which is threatened by Congress calling Section 230 of the Communications Decency Act into question, endangering the platform's protection from liability as a publisher or content provider. As investors pair their expectations for the size of another financial aid package by Congress to boost the economic recovery from the coronavirus pandemic, U.S. Treasury yields may fall, increasing the value of the future earnings and growth stocks. So let's dissect both of these real quick. So the big tech, the big four right here are definitely, now that the presidency is left leaning, I think they're going to crack down a lot harder on this, because the Democratic Party is definitely they're definitely more antitrust. Like, they're definitely going to skew more towards the side of going harder on these large tech corporations and really wanting a little bit more fairness. It's less capitalistic and more kind of fair. Morally fair. It's all in the eye of the beholder, right? So I'm not saying I think that's right or not, but that's likely what's going to happen. So the big four are definitely in more danger under a Democratic president than a Republican president. And let's go investors. So then it's all back to the stimulus, you guys. Again, been talking about the stimulus for weeks now. Stimulus is the single most important factor, and the size of the stimulus is very important as well. Job numbers actually just released, and those were impressive. Like, there's a lot more jobs than people expected, which is good. But that also kind of backs the Republican argument that there should be a smaller stimulus. But now that there's a Democratic presidency, they're definitely going to have the leverage in creating a larger stimulus package. But in terms of near-term stimulus, they still need to come to an agreement. So Mitch McConnell in the Senate still needs to approve it. So there's still hoops that they have to jump through. There's still oppositions. So not just going to be printing money out of thin air. If we had a blue wave, that would probably be the best thing as far as stimulus goes, because then they just print to no, they just keep printing, which would be good for the markets, bad for the dollar, good for the markets. So again, when it comes to a stimulus, we will just have to wait and see. I remain optimistic that we will see a stimulus soon, but again, time will tell. So that is that, you guys. I hope that gave you some insight as to what a Biden presidency may look like, but of course we will just have to wait and see how this actually plays out. Moving on, Berkshire, Warren Buffett buying back some stock. As the coronavirus pandemic weighs in on its operating earnings and stock price, Berkshire Hathaway ramped up its stock repurchasing program even more in the third quarter, nearly doubling the record buyback from the second quarter. Warren Buffett's conglomerate bought back $9 billion of its own stock. It was revealed Saturday in its third quarter earnings report. That's up big from the $5.1 billion level during the second quarter that turned heads when it was announced, and bringing Berkshire's total buybacks to $15.7 billion for 2020. Berkshire repurchased more than $2.5 billion in Class A shares and about $6.7 billion in Class B stock during the quarter. This blew away UBS estimate for a total quarterly buyback of just $3.2 billion. So again, that's about 3x the estimate. That's very impressive. And again, you guys, it's just good. I just wanted to share with you guys because this is a sign of good economics, because Berkshire Hathaway, they own a lot of like very legacy companies like railways and like crazy stuff that you would like. So they own some entities under Berkshire that you wouldn't like, are kind of surprising to a bubble boy like me that still exists, to be honest. But it's just a good sign it's a good sign that the economy is getting better, because again, being that Berkshire owns so many legacy entities, that's a good sight into the actual economy, as opposed to like these tech stocks that have been so on fire. Like, it makes sense. Obviously, tech is propelled forward. Tech is trending faster at a faster rate than it ever has ever. And it's good to see that so again, just some of these legacy plays, some of these plays that are tied to like actual economics, again, railways, like infrastructure, banks, which Berkshire is big in, is kind of stepping it up, and that's a good sign for the overall economy. So that's what I wanted to go with there. Good stuff, Buffy. Moving on, Winklevoss Twins. Talk about two polar opposites of the investing landscape. Bitcoin has gained 115% this year amid central bank easing. The Twins were early investors in cryptocurrency. So these are the Winklevoss. Again, Bitcoin billionaires. We'll be talking about this at the very end, so stay tuned. Tyler and Cameron Winklevoss, whose fortunes have been on a roller coaster since they jostled with fellow student Mark Zuckerberg at Harvard University more than a decade ago, are once again billionaires thanks to a surge in the price of Bitcoin. The twins bought $11 million worth of Bitcoin in 2013, according to the New York Times, and soon became evangelists, creating cryptocurrency exchange Gemini Trust. The 39-year-old brothers, who gained widespread fame following the release of the 2010 movie The Social Network, briefly became billionaires in 2017 when Bitcoin soared to a record before the volatile currency plummeted. Bitcoin has more than doubled this year to $15,400, partly driven by fears that massive central bank easing and fiscal stimulus will debase currencies. Each of the twins is worth about $1 billion, according to the Bloomberg Billionaires Index. They also own other cryptocurrencies, including Ether. So this of all, like, just Bitcoin, you guys. Bitcoin billionaires. This is just good news for Bitcoin. Like, and that's these guys. If you've listened to, I really commend you guys to go listen to some podcasts with them. I just talked about this in a recent video, like the 500K Bitcoin video I posted a few days ago, talking about their interview on What Bitcoin Did. The What Bitcoin Did podcast with Peter McCormick is a great interview. So I highly recommend you guys go listen to that if you haven't already. And it's just cool to hear these guys who are obviously so competent. They're so capable. If you guys watch Social Network, I also recommend it. That's some other content of the week. If you guys haven't watched The Social Network, go watch that movie. They're in it. You could argue that they founded Facebook, and then Zuckerberg kind of because he was like the truly technologically capable one, was the one who was actually able to execute on it. But you could almost say that Facebook was their idea. So these guys are early to trends. That's kind of the primary message that I'm trying to convey. These guys are early to trends. Obviously, they put $11 million in Bitcoin in 2013 when it was a lot more speculative than it is now. That's a bold play, and it paid off for them. And that shows you guys, if you're early onto a trend, I have a lot of stocks that we talk about on this channel in mind right now. I think some of you guys know where I'm going with that, but it just shows that when you're early on a trend and when you have conviction around a long-term trend, strong hands, baby, strong hands always win in the long run. So embrace the volatility again, you guys. Bitcoin, even right now as I'm speaking, I think Bitcoin's like down to like 15K, so it's down a few percent. But that's, again, you guys, we're on the roller coaster ride. So strap in. If you guys can't take the heat, then go put on a face mask or something. I highly commend you guys to. It builds character, builds a strong stomach. If you guys can't take the heat, then suck it up and start taking the heat, okay? But because we're in the bull market for sure, and it's gonna be bumpy. So just prepare for some bumps. But if you have conviction like I do around this asset class, then and just hold strong, hold steady. Moving on to finish it off, Ethereum 2.0 begins launch process of deposit. As deposit contract goes live, the first day of December is likely to be the launch date. I always love Cointelegraph's visuals. Like they have the best graphics. Ethereum 2.0 phase 0 has now been formalized for launch at some time around December 1st. The deposit contract is live and can collect the necessary funds to trigger staking. An update by the Ethereum Foundation released on Wednesday explains how the genesis process is expected to happen. Prospective stakers will now be able to deposit their 32 ETH deposits to contract via the dedicated launchpad and get ready for the launch. The contract must collect 16,384 deposits of 32 ETH each, a total of 524,000 Ether, or about $200 million to proceed with the launch. I think that's easily going to happen. The required sum must be collected at least 7 days before the launch expected date of December 1st. If it is not, the launch is delayed 7 days after the threshold is reached. The announcement marks the first time that a clear date for Ethereum 2.0 launch is set after many years of anticipation and delays. So again, if you guys heard me talking about ETH 2, if you guys have been in the cryptocurrency space like I have, you guys would know that ETH 2.0 has been pretty much at this point like a promise, just a promise, and like a thing of almost mythological. ETH 2.0 has been a mythological creature in the cryptocurrency space. Like they've literally been talking about it for years, and I just kind of everyone just kind of gave up. Like they bring it up every few months, just kind of spark everyone's just remind everyone of the fact that it's actually a thing. But it's taken so long, and people have been waiting so long for it. So it's just kind of surreal that it's finally coming out. And obviously a lot it's only going to take what did it say, $200 million of ETH to fuel this new launch. I think that's easily going to happen, because again, staking is where you need 32 ETH. So if you have 32 Ethereum, you put that up, you stake it, and in obviously it's exactly like interest. That's the best way to describe it. You put your ETH up and you get paid in ETH for collateralizing your Ethereum. So that's huge. Obviously, you guys, you want your money to make you money. It's like high interest too. It's not like ridiculous bank interest like 0.01%. You get paid, you put up 32 ETH, you're going to get a fairly significant amount of ETH. I'm not exactly sure what the percentages are, but I know it's definitely worth your while to stake. So that's good. Obviously, it incentivizes people to hold ETH and have ETH, and just it's another value prospect for the token of Ethereum. So that's good news, you guys. And again, just everything going on in the cryptocurrency space, you guys know I'm super bullish on crypto right now, very obviously. So it's exciting to see so much fundamental progress going on along with the price action, because Ether's been doing really well as well. So yeah, you guys, I think we'll call it there. Let me know what you're excited about going into this week. It's definitely gonna be an exciting one. Please let me know what stocks you want me to talk about, what stocks you want me to keep an eye on, and what stocks you're excited about personally, or just literally anything else, whatever you want to talk about. What are you guys drinking? Let me know what you're drinking. Forgot Bitcoin Billionaires, you guys. So Bitcoin Billionaires. Let's go back to the Winklevoss quick. I have recommended this book before, but it's just so timely due to this article that I feel like I should recommend it again. Bitcoin Billionaires by Ben Mezrich. It's a story of how these two got into Bitcoin, and it's 100% based in truth, but I would say it's 90% truth, because this guy Ben Mezrich, he's the same guy who wrote The Social Network, the Facebook one, and I think they're actually making a movie about this too, so that's going to be super exciting. That's for sure content to keep an eye out for. But again, it's 90% truth, and then 10% kind of, you got to make it fun to read. You got to make it a little more extravagant than it actually is. And he did a good job of doing it. And it's a real fun read. And it makes you, he makes something that almost seems like education. And again, being such a Bitcoin bull myself, I was loving it, and it's fun to read. So it's informative. You learn from it. You do learn from it. You gain some insight into their world, into their thought process. So it is, in a sense, almost like a self-help book, like entrepreneur-based book, but it's also very fun to read. So I highly recommend it, you guys. I will link this down below in the description. Check it out if you want. But yeah, we'll call it there, you guys. Again, drop a comment. What are you drinking? What are you excited about going in this week? And we'll call it there, you guys. Until next time, always remember, take action, make waves. Peace.